Happy New Year. Let's make some money. Good morning. It's hang on one second. We gotta look at this. All right. I'll talk, but I want to get this. I want to get my face and stuff out of the way early because I wanted to walk through what I'm doing here. But welcome. This is the first episode of the $500 small account 5-year series, rags to riches, all that good stuff. So this position here, CING, was one that I was swinging from last Friday. It was a day trade that I decided was had good potential to swing into the new year. So in this case, there's no special dividend. It's just a short-term speculative trade. What I did is I averaged down into it. I added 3 more shares today. Let me go ahead and pull up the orders on that and then set the filter just so you can kind of see what I did. Sorry for the abruptness. So on Friday, I kind of built down, right? I got one share at 13.55, another share at 11.35, and then I sold at 12.92, half of that position. So I was breaking... Sorry, I'm breaking my congestion up too. I broke the position down, right? So I bought a share lower, and then sold it at break even, half of it. So I was basically just moving my average down, along with a small profit. And then I bought another share at 9.96, and then I reduced it again, which left me with 1 share to carry into the new year. And then obviously we had some holiday and some weekend in the mix, so we are in a short week. And I bought the next share at 7.22 today, and then 2 more shares at 7.25. And it was, as I was starting this episode, it started to pull back up towards 8, I think it was like 8.10 or something. So it was moving pretty quickly. I didn't want it to push up into that break even without being able to illustrate the advantage of doing what I'm doing, as well as kind of highlighting some caution, right? So in this case, when the price breaks down to, when it pushes up to 8.24, I'm going to reduce the position by 3 shares, leaving still just that 1 share. So all I'm doing is walking 1 share and its average down through the price action as the price action goes down, as appropriate. And then when the price action reverses and goes to the upside, I'll still have that same share, but I'll have the ability to push the profits up much higher because of my lower average. So, okay. So with all that kind of out of the way, it is the first trading session of the new year. There's 252 per year. We do have a leap year and an election year. So got to be kind of mindful of those, but not really super significant in the grand scheme of things. So you can see here, NIO dropped down quite a bit. If we look at that stock, you can see that they've had a little bit of a sell-off after hours in the market open, and that's just tech overall. It's not something I need to worry about necessarily. And then if I look at periodically here, you can see that we're in the first day of the month. So I just kind of want to push back. If I go back to December here, you can see this was kind of a mixed bag because of these larger positions having some noise. But now that we're in January, we get a fresh start. We can see how it goes in real time. So it's going to be pretty fun, I think. So this is the 3-month P&L curve. Obviously, it's still positive, and we added $500 again for the January contribution. So I will buy my larger shares either today or throughout the month as I see good discounts, and today is a pretty good day for that because the market's kind of a little bit red, so it might be a good day for that. A lot of people are selling off their positions into the new year. That is not uncommon. It's post-Santa rally. A lot of people just want to kind of get out of the market to see where it's going to go for the year. So that's really all I think we're looking at, and it usually starts with tech and energy. So we'll see how it goes. And other than that, I'm just kind of watching these positions. So I also added 2 shares to MBI, again, just to follow that same concept. I'm just building the position down. You can see it's still pushing down pretty aggressively, so I'm holding some cash in reserve for what I plan to allocate here. But overall, I have 3 shares, average of $7.51. I think it was up to I think it was 10.80 because that's where I originally bought that 1 share. Now I'm in a position where I'm recovering the share, right? So in order to do that, I'm simply DCAing down just a little bit. I don't want to go super balls to the wall and put 90% of my portfolio in it just to recover 1 share. But I do want to build down nice and slowly and patiently, a little bit at a time, just to get the average down. And then I always have a sell order immediately above that. So 2 cents above my average on all these positions. Post-ex-div, right? I'll always look to break even or reduce the share amount by that 2 cent profit limit. All right, and then that way I'm guaranteed on those 2 shares or 3 shares, depending on which ticker it is, to reduce my risk exposure, which is always my #1 job. but also to not lock in a realized loss just yet. Now, I could easily just cut these, and I will if it breaks a certain level. Like I don't want it going into this gap here, but other than that, I'm free to kind of play down into that gap level and, play off the psychological supports, the whole dollar numbers. And then if those hold, I'll add that final piece, and then the price will go up, and I'll be able to break even nice and low, right? And that's kind of just the way you trade those in certain cases. Or if you're not comfortable with the risk, you can just cut them immediately, right? Remember, the purpose of rolling these special dividends is to buy before the XDiv, right? Because you're buying the share and that cash payout. And then the XDiv comes along and it separates the two. So you get the cash payout deferred to the payment date. And then I can sell the share for a realized loss of the same amount and then receive the cash payout and get a tax advantage. But I kind of also want to recover the shares in a lot of these cases because they do have potential for that. So why would I, I don't have to take a loss. I'm not going to, it's just a matter of adding a little bit of speculation into the mix as well. And again, I'm not too worried about taking a small loss because now this is still, it's a $20 position. I'm not too worried about it. It's less than, 1% of my portfolio. So I haven't hit the 1% risk or max loss yet, so I'm not too worried about it. But if something gets adjusted and it's 50% down just because of the adjustment and then it starts going up, anything that I add into the mix after that is still technically a profit, as long as it doesn't exceed the realized loss in comparison to the dividend payout, right? So it's a little bit of just fancy math and some averaging down and some a little bit of speculation added into the mix, but you don't need to do this part of it. This is just to recover the shares, right? So we teach more of that in the PBU, the university aspect of it, as well as the PBA, the advanced education. For those who aren't in the Pennybois Discord or in the Facebook or in the community in general, don't necessarily have to worry about that. But if you'd like to join us, there's obviously links in the video description and all that good stuff. We also have Stocks Buddy, so it kind of makes the process a little easier for you. But I'm very sorry, I'm very congested. I'm very opposed to doing like product pitches and stuff like that because this is to help you guys learn, right? This is the purpose of this is to give you a foundation, right? All that other stuff is great, but it's to build on top of this stuff to optimize it, right? So I don't want to see people starting with the, the really super complicated, like, oh, you need this strategy that you see in like a YouTube video. If they don't have some sort of passive income to keep things stable or position size management or portfolio management, those are always going to be more important than any technical analysis. And that's why we focus on that in Pennybois. It's not, just go here, learn this strategy and you'll succeed, because that's not how it works. You have to have psychology. You have to have a plan for every single dollar that you have, as well as every dollar that you'll get, right? You can't just freeball into the market. So this is the new year, and this is the opportunity of opportunities for everyone to, if you weren't net positive for 2023, this is an opportunity to start fresh. Consider adding some passive income in, doing things a little bit more responsibly. And, if if you need to make changes, this is the best time to do it, right? And yeah, other than that, I'm just kind of letting this go. Sorry again for the abrupt intro. I will go through the positions in the later video here, but for CING, I'm just kind of letting it recover, and then I'll have that one share to ride up. This is still a micro float. It's less than 1 million shares, so if that pops, it'll pop nicely. And I think if we get up above, maybe $9, we should see some good volume there. But for now, we're just letting it ride. Johnson & Johnson's pushing up nicely again. This is on the 30-minute time frame, so had some pretty good early morning action here, so we're seeing where that goes. SSIC, I can sell at any time. You can see I got my sell order here at break even, so I'm not worried about this. It's just set it and forget. I don't have to worry about it. If it's time to recover these shares, I can do that later. But for right now, it's still within, it's within that 10% threshold, so I don't even have to look at it. Okay, so let's scroll down here. HTHT is still within 10%, so I don't have to worry about that one either. This is on the 1 minute, but we're post XDiv, which means I'm looking to recover or break even on this one. So if I need to add more to it, I might, but it's still within that 10%, so I don't even have to think about it yet. SFE is past XDiv, and I got my sell order set here, just waiting for that payout. And actually, if we look here at the payables and receivables, that is part of it. I'm getting $6.30 from that, and if I look at the position here, it's $4.32 unrealized loss so far, and it's still moving up a little bit. So This number here, this negative 23.29% and this $4.32 adjustment, this is actually $2 up. Remember, because it was adjusted down $6.30, or I'm sorry, it was adjusted down a smaller amount for the dividend, but as you can see here, the price didn't really move down. You know, it's just an adjustment for the dividend, so I don't have to worry about this. It's up, and I'm getting that payout anyway, so it's just a numbers game at this point. MBI obviously is outside the 10% range, so I've added to it. And CING was, but I added to it. Now it is no longer, so I won't be adding more shares to this one. I will just look to reduce. So hopefully that makes sense. It's just another layer of speculation in the mix. And again, it's all just position size management. I don't have to do any crazy analysis here. I just have to know it's greater than 10% away from my cost basis, and it's moving in the direction I want it to go. So I'm going to add another piece and then break even immediately. So that's the goal. This video is over 10 minutes long, so I'm going to stop here. I hope everyone had a safe and happy holiday. And next episode, I'll be a little less spastic and get through some more specific stuff, like the new positions I'll be buying. So make sure you pay attention to that one. I'll go through all the new buys that I have for the year, the cost basis, and all that good stuff. So I'll see you guys then. Thank you, and have a good week.